Did you know that over 80% of real estate investors choose the wrong business entity, potentially costing them thousands in taxes? Today, we're going to explain the real estate wholesaling and best entity type for real estate wholesalers. Let's get started. Introduction to real estate wholesaling. Real estate wholesaling is a dynamic strategy where investors secure contracts to buy properties and then sell these contracts to other buyers, often at a profit. This method stands out because it allows investors to generate income without actually owning the property. For instance, imagine securing a property contract for $100,000 and then wholesaling it for $120,000. That's a $20,000 profit without the long-term commitment of property ownership. Wholesaling appeals for its potential for quick returns and lower initial investment compared to traditional real estate investing methods. Understanding wholesaling mechanics. In real estate wholesaling, investors focus on negotiating and securing contracts to buy properties at a low price and quickly reselling them at a higher price. The process starts with finding undervalued properties, often ones in need of repairs or from sellers eager to sell. For example, a wholesaler might find a property valued at $150,000, negotiate to secure it at $100,000, and then sell the contract to another buyer for $120,000. This strategy allows the wholesaler to make a $20,000 profit without renovating or even owning the property. The key is in the negotiation and understanding of the property's market value. The tax implications of wholesaling. In the eyes of the IRS, real estate wholesaling is considered a business activity. This classification means that wholesalers must report their profits as income, subjecting them to regular income taxes. However, there are tax benefits too. Wholesalers can deduct business expenses such as marketing, travel, and professional fees, which can significantly reduce taxable income. On the flip side, they don't benefit from long-term capital gains tax rates, as their income is typically generated in the short term. It's important for wholesalers to maintain accurate records and understand these implications to manage their tax liabilities effectively. Schedule C and reporting income. Schedule C is used to declare profits and losses from their wholesaling activities. This form allows them to detail the income generated from property contract sales and subtract legitimate business expenses, like marketing, travel, or professional fees. Accurately completing Schedule C is vital for wholesalers as it directly impacts their tax liability, ensuring they pay the correct amount of taxes on their wholesaling income and benefit from eligible deductions. This process underscores the importance of meticulous financial record-keeping in real estate wholesaling. Choosing the right business entity. Choosing the right business entity impacts tax liabilities and offers legal protections for real estate wholesalers. Operating as a sole proprietor is straightforward, but offers no personal liability protection, while an LLC provides this protection and has tax flexibility. Consider an S Corporation when profits increase significantly, as it can offer tax savings on self-employment taxes. For example, if a wholesaler earns $100,000 as an S Corp, they might save on taxes by categorizing a portion as salary and the rest as a distribution, which is not subject to self-employment tax. A partnership is ideal for joint ventures, allowing income and expenses to be shared. Tax planning and strategies. Customized tax planning is essential in real estate wholesaling, as it can significantly impact profitability. As income levels change, wholesalers should reassess their tax structures. For example, at a lower income level, operating as a sole proprietor might be sufficient. However, if a wholesaler's income rises above $50,000, considering an S corporation could be more tax efficient. This is because part of the income can be taken as a salary, subject to self-employment tax, and the remainder as a distribution, not subject to self-employment tax, potentially saving on taxes. This strategic shift in tax reporting can maximize earnings and minimize tax liabilities. Deductible expenses for wholesalers. Wholesalers can deduct a variety of expenses to minimize their taxable income. Advertising costs, crucial for finding both properties and buyers, are fully deductible. For example, spending $2,000 on marketing can be subtracted from the gross income. Auto expenses, either by tracking actual costs or using the standard mileage rate. For example, $0.58 per mile in 2023 for 1,000 business miles equals a $580 deduction, are also deductible. Other miscellaneous expenses include office supplies, phone bills, and professional fees, such as legal or accounting services. Say a wholesaler incurs $500 in office supplies and $1,000 in professional fees. These expenses further reduce their taxable income, optimizing their tax situation. Wholesaling plan to reduce real estate taxes. Here is a detailed wholesaling plan to reduce real estate taxes with specific numbers. Consider the following steps. Select the right business entity. If you're a sole proprietor earning $75,000 from wholesaling, transitioning to an S Corporation could save on self-employment taxes. For example, by paying yourself a reasonable salary of $40,000 and taking the rest as a distribution, you could save on taxes for the $35,000 treated as a distribution. Track all deductible expenses. Deduct expenses like $2,000 on marketing, $3,000 on travel, and $1,500 on professional fees from your gross income. This reduces your taxable income, thereby lowering your tax bill. Strategic investment and quick turnover. Focus on properties you can quickly resell. If you buy a property for $100,000 and sell it for $130,000, you make a $30,000 profit. The short holding period reduces long-term capital gains tax. Consult tax professionals. Work with tax advisors to understand evolving tax laws and maximize deductions. Maintain accurate records. Keep detailed records of all transactions, expenses, and income for accurate tax reporting. This plan should be customized based on your specific financial situation and reviewed periodically to ensure it remains effective. Here is a gift for you. We offer a free consultation with our expert tax professionals to help you navigate the wholesaling to reducing real estate taxes. To book your free session and gain valuable insights tailored to your situation, simply click the link in the video description. Don't miss this opportunity for expert guidance. If you found this information helpful, please show your support by liking, subscribing, and sharing this video. Your engagement helps us reach and assist more people. Don't forget to drop your thoughts and questions in the comments below. We love hearing from you. Stay tuned for more insightful content.